Welcome to the Flow Tracy Money Audio Commentary. This is Owen Tracy recording, and it is 2:32 p.m. That is Central Time. Today is December 21st. I thought we'd kick off today and look at carbon emissions because that's a really impressive rebound we've had over the last week, or I think really it's more like the last 3 days, from the region of the 1,000-day moving average and the lower side of the range that's been evolving for the last 2 years. I think the thing that really springs to my mind is we have a free market and then we have dictated markets, and carbon emissions are a dictated market. It wouldn't exist if it wasn't for government policy. And the reason it exists is to try and force people not to emit as much carbon and, by the way, also not to pollute the atmosphere as much as normal. So there's a clear memorandum to try and ensure that the price stays high enough to ensure that industry remains on the given path. So it's hard to imagine an environment where the price would be allowed to fall very much further than it already has. Then I think when we look at the rest of the market, we can sometimes think about the way in which prices are dictated versus how they might perform in a free market. So the ESG movement is another way that by telling the market what to do, then it might not do what you want, and divesting of all of those oil companies, for example, might not have been the best idea when oil shares were among the best performing assets in 21 and 22. So, but then of course, I'm guilty of the same kind of thing, telling the market what to do by being short at the wrong time. So sometimes you just have to listen to what the market is telling you. Well, certainly when we think about what's going on in the markets today, well, we had a fairly significant decline yesterday on Wall Street, and it was a little bit steadier in here today, but not up in as dramatic a manner. Then the Chinese market, which has been selling off for most of the last several months, was in positive territory. And then India, which had a downside key reversal yesterday, then was rebounding in here today. Then in Europe, the majority of indices were in negative territory. Japan was also in negative territory, really, I think, taking the cue from the decline that we saw yesterday on Wall Street. But then also the dollar has been weak, so the yen has now strengthened through the 200-day moving average, and we continue to see a great deal of commonality within the sovereign bond markets, where yields have compressed pretty much everywhere. Then within the emerging markets, we continue to see, I think, more evidence of support coming through, where investors are looking at the relative valuations and looking at the potential that if the dollar rolls over, then the valuations in several emerging markets are going to become a lot more attractive. And I think that's probably where we're going to see a lot of focus in 2024. So plenty to pay attention to right now.